Alrighty, we are live. I started another backtesting session, so let's hit continue. Just to I don't know how you minimize this. What is this? Uh-oh. Okay, well. Okay. So on YouTube, I can trade live again. Just so y'all know, I just have to clear some stuff on my computer and just close tabs, like all those internet tabs I have. Let's talk about, so I finally have my final setup for my trading view, so y'all will see this on Monday. I'm leaving the sessions back on because I'm realizing on Friday I took a buy thinking we would go to these equal highs. We obviously did not, and then we got a reversal and we were going, sorry, not there, here. I thought we were going up to these equal highs. We were not. We came up and we reversed, and where did we go? Down to a 4-hour provided gap. Obvious CRT, obvious sell day, I should have known. And then we had Asian low. Did my computer freeze again? Or my mouse just died? Sometimes my mouse dies. Okay, yeah, we had obvious Asian low here. And that was the target. So that's why I usually leave my sessions indicator on, because you'll know, like, when you get on the chart, if we have liquidity of a session below or above, that's usually our target, and that's how it's profitable for us. So say we got on New York session here, it didn't take out the target, but since we were running up, we kind of got halfway down. Or on days like this, we came up, we were going to Asian low, so this was a down day, and then we wanted to keep going to the previous day. So you kind of know, like, where you want to target. And then there was days like this how we swept the bottom side already. So in our New York session, we knew we were taking out London highs. You see what I'm saying? It helps you, like, do the sessions. I have my 15 EMA. And then so I think my computer was just being slow because I had to, like, clear all my tabs and, delete some stuff. But the S&T indicator is working. It's the Lux Algo S&T divergence indicator, because I hate watching ES. I'm only watching ES for S&T, nothing else. So I hate having it on the chart. I'd rather just have my charts next to each other. And I don't like the fractals. I tried to use it. I don't like it. And then, yeah, so SMT, because it wasn't showing higher time frame SMT, so it's like, this is useless. But it's not. It's showing you the things, and I have it on the hour 1, 2 for SMT for reversals, and it's showing you great reversals. Also, I want to know how y'all feel about Apex funding, because of how they're asking for videos. When it comes to, they're asking for videos when it comes to payouts, and that's very scammy. But a lot of people still like Apex, or they just said they have more rules. If you follow their rules, you'll be fine. What do y'all think about Apex? Let me know in the comments, because I was going to use them next because they're so cheap. But with all the Forex, prop firm space errors and stuff, it's giving that I'm probably just going to get one more My Funded Futures prop firm account, maybe two, like one 100, one 150, and then after that, I'm already going to trade my live account anyway with it, so I don't really need them. You know what I'm saying? I'm at a point where, like, my goal is to trade my live account with the fundeds for diversification, and then also I can wait for payouts. I don't have to take a payout every day. I can wait, like, at the end of the month, because on the live account, I've made $4,000. I can cash out, and then boom, by the end of the month, hopefully the fundeds are at like 10 or something, something like that, and then I can just take out a payout. Also, so today we're gonna back test. We're gonna mark out 9:30 and 10:30, because we're in a space where obviously I trade at 10 o'clock, but we're gonna learn what happens at both times, as what most of us should be doing, just getting on at 9:30 and knowing when to play at 9, when to play at 10, or whenever the fuck. But I usually don't. I usually just play one or the other. Now, some people say they wait for a 9:30 Judas swing, which is basically what you want to happen. You want 9:30 to come, and you want to sweep something and then go the other way. Some say pre-market highs and lows, which are, anything 8:30 to 9:30. Some people do their pre-market at 9 o'clock. So technically the low and high of pre-market are, we already marked the sell side one, then this is the top one. Again, then we'll see what happens. But last week, a lot of 9 a.m. good trades, and then we had a lot of, Friday was a 10 a.m. trade. I'm into it, but not into it. Like Power of 3 works, obviously, because it's just the wicks of each candle. So if you're trading like this big candle, you want to get in at the bottom, at the down part, and then take it to the up part. So yeah, it's a Power of 3 thing, but I don't really trade it in a sense of like, oh, this is accumulation, so we should break one side. Like, I don't actively trade it on the charts, but I'm just saying you do want, that's what you expect at 9:30 for it to come, take out a liquidity point, and then run the opposite way. I've seen that happen sometimes. I've seen it fake out. That's why I don't really trade anymore. I just like trading a straight reversal or a straight continuation. Oh, also what I wanted to show on here, then too, with the continuations at 10, because I almost went back to trading at 9:30. Look at this beautiful SMT for a reversal to the upside. Obviously not in our session, but on the 4-hour chart, it will let you know when we should be continuing. Like this is 2 a.m., 6 a.m., 10 a.m. So you know when to keep continuing. You're not scared. You're not lost for the reversal. Like you'll know days like this. We continue down at 10. There was no reversal back to the upside on the 4-hour chart. So you can like use it to also know when it's going to continue, like days like this. So you're not only trading 10 a.m. reversals if you need to. Obviously we get a bunch of them, but there are days when you don't get them, and then you need to know when to play the continuation or don't trade that day. Do you get it set up every day? I do. I personally do. I know a lot of people say don't trade every day, but my goal in my whole trading career is to find a setup every day. I love trading. I love trading every day. Also love making money. I like making money every day. So it's the only thing about trading. You don't make money if the market's not open, unlike drop shipping or some shit. But come on now. Okay. So boom, beautiful trade. We'll talk about what happened, but you did get an internal liquidity sweep here. Boom, reacted off of it, ran up. That is what you want to see at 9:30. It take out something, but sometimes it's so fast and hard to see because we marked this one. It can be an internal one as well. Some people call it the breakout range strategy, which this might be the range on a 5-minute chart. Let's see. This is what I just want to do today. I want to study it. I want to mark out trades. We're going to actually like study some shit so we can be good traders. What does that look like on the 5-minute chart? But yes, I get setups every day. So yeah, it is like a little range. It's this 5-minute candle here. Or you can even do just this candle or this candle, whatever. 5-minute, and then we ran up, which is a great trade. That first candle close at 9:30 is the one you would have, entered off of. Stop loss below the body or the wick, depending on how you feel. And then you can take it for a 1 to 2. You could have took it just to this liquidity point here. There might be another one to target. It's giving previous day's highs for those who trade previous day's highs. I just trade sessions unless it's a day like this where obviously, we already swept the previous session highs, so we're clearly going to previous day highs. Then yes, that's a trade there for the open. And you know how it helps you not be scared to get in that trade? The 15 EMA. You see how the space you have? You still could be in this trade. You have a lot of space. Let's see, and we're far from 10 o'clock. You have a 8-minute trading day, which is beautiful. Let's see what we get at 10 o'clock. Nothing. It's giving, well, it's not 10 o'clock yet. So let's see what we get at 10 o'clock. I'm trying to see if there's another liquidity point down here that we swept. Let's see if we get reversal. Boom, our 10 a.m. reversal is playing out nicely. Let's see if it takes out the highs from 9 o'clock. It doesn't, but it's still a good trade. It's still honestly bigger than the 9 a.m. trade. It's not. I like it when it goes. The 10 a.m. reversal goes all the way up, to the 9:30 high. But this is still a bigger trade than that trade. You get a market structure shift right here at this swing high. Tap back into the breaker for you, and then just take it up to there, something like that. So yeah, see how it's a bigger trade than this one? That's why, like, you don't care what happens at 9:30 if you're a 10 a.m. trader like I am. I don't care. I used to sometimes be like, damn, I want to catch this. Like, this is a nice trade off an inversion fair value gap. This is why I also like the 1 minute chart. You can really just trade all three of these if you're a greedy motherfucker, or you just like making money. I like just to catch the big ones, obviously, but 10 a.m. reversal. This is a macro almost reversal. Then we got the beginning of our macro started the 10 a.m. reversal. So beautiful, beautiful trade. You can trade all three of these. So we're gonna backtest this just to see how often we get, a 9:30 run. I know a lot of people trade these. I don't really trade these in between runs. That's still a beautiful run though. You would have got in at the candle close under this bullish fair value gap high. This one might have the best risk to reward though. All about the same. Well, this one's a little bigger, but this is the biggest move of the day though. As we can see, yes, the risk reward is bigger on this one, but you would have made more money on the move. This whole move swallowed this whole trade up, stop loss and all. So you can just trade that, and you could have got a confirmation entry again with the EMA if you wanted to get in after the run under the EMA. So yeah, a great morning of price action. I like zigzaggy price action like this, in my opinion. I like a liquidity to liquidity price action. Obviously, when it runs down the rest of the day and it's a beautiful day, it's great, but it just gives us so many opportunities to make money when it zigzags like this. All right, let's go to the next. New York session, 15-minute chart. You don't really need the hourly, obviously, but it will help you know where it's going. Like I said, the hourly and the 4 hours, that's why I start on it. But for the back testing, we're on the 15 here and then the 1 minute here. Liquidity here. So yeah, for YouTube, I'm gonna try to stream on Tuesday, not Monday, and see how my Ninja Trader acts. And if it's fine, I'll keep streaming. If not, I'll have to continue just on YouTube. Trying to see if we have any fair value gaps. Kind of have one here. We're kind of in a big one here that we already came out of on the 15-minute chart. So let's just see. And then we mark our 9:30 and our 10 o'clock. And this is what you should be doing for backtesting. I know a lot of people have been asking me, how do you backtest? You see how I do it different ways. There's days I mark up the entries before they happen, or like mark up the trade I would take before it fully plays through, because that's what most people want to see. That's why people come on my lives and they keep asking, like, why don't you place orders so you can see the P&L like come up and go up and down. I mean, I could do one, I guess. Okay, so here we did not really get a liquidity sweep reversal, and after the 9:30 candle, you would have maybe took this if you wanted it. But where's there another liquidity target? Okay, yeah, there's one down here. I was gonna say, because this to this I wouldn't take if I think it's going here. I mean, it's still a move, whatever. This is not bad. Does it go to the third one? Not quite. But it could go down there. Let's see. Boom. Okay, went down there. So you could have took that off. This is messy. This is the 1 minute chart. So this is very messy, but hey, with your stop loss decent, maybe above the high of the candle, still a 1 to 2.5 risk to reward. Great trade. Still had space for you to hold the trade a little bit, and then maybe once you saw it pull back, you might have maybe sold here somewhere. All right, let's see if we get 10 a.m. reversal, or we might get a continuation off this gap. That's a good thing about Friday gaps. If it comes out of it, we're going down. If it, inverses it, we should go up. We do have a nice wick on the 15-minute, but again, this has to still play out. Came down. So I would have waited for a displacement, a strong candle out like this one, or even the second one, because this green one, and then you would have got in again for a continuation. So either the bottom of this candle or the bottom of this candle. Up to you. And then is there another liquidity point to target? You always want to sell. It's always going to at least a liquidity point, and then we have equal lows. So that's where your take profit should be. Now you can just do a 1 to 2, a 1 to 1.5. You can just do that. But if you're an ICT trader, you at least know it's going. You kind of can know where it's going a little bit. Boom. See, you know it's going to liquidity. And then there's another one. There's an equal lows down here. If you want to keep going, you want to be greedy, and you want to not be greedy. I hate that word. I like that word, but like if you want to see if it keeps going lower to that other one, which I think it did, we had equal lows, which are our strong liquidity points. And it did. See what I'm saying? So that's how you trade with the EMA. And this is why I'm like, a part of me wants to get back on at 9:30, because you can catch these, and then if you're still in it, you're still in it for 1 to 10. And then if you're not and you reverse, you'll play, till here, you'll get out for a nice 1 to 3, and then you'll catch the reversal, or you'll just be done, you know what I'm saying? But for the days it does run down at 9:30, you're milking the cow with a beautiful trade. So I don't know what y'all think. Should I get back on 9:30 on Tuesday? We shall see. I don't know yet. I kind of want to. What EMA do you use? 15. I know no one uses the 15. Everyone uses the 9 and the 20. Everyone uses the 9 and the 50 for real. I fucking hate the 9 and the 50 EMA. Because I like an EMA that doesn't hug the charts too tightly. Because the 9 hugs it so much that you won't, like a candle will break above the 9 and you'll sell, and then it'll keep going your way. And then the 20 is a little too far where it'll eat your profits back up before it crosses back over the 20. So the 15 for me, like, it holds. You're not getting out of your trade here. We don't have a full candle close above. Like, it's holding, it's holding the trade. And then you'd probably sell here at this full candle above it, but it didn't give you that for a while. So I like the 15 EMA. So let's continue next New York session. My computer is already going so much faster, which I love, which is obvious. I should not be having 16 tabs on 3 browsers open. I'm just lazy like that. And it honestly would be faster if I didn't have Amazon open in this browser, but it is what it is. Okay, the 15-minute, we're not really getting anything. Like I said, as liquidity, as ICT traders, and for me, it's really just liquidity for value gaps is all I really mark. Obviously, like I said, some days, like we saw on Friday, the SMT and the CRT is just going to be so obvious, that, you'll see it. But I don't trade CRT only. I don't really trade SMT. But on days where it's like I get on the chart, it's obvious we're going down. It's nice to see the 4-hour and know we're going to a 4-hour for value gap. So I do look at it from time to time, but I usually don't. I usually just trade like this, 15-minute, 1 minute. I'm trying to see something. We have a liquidity point here. You just want to mark a few, because sometimes I used to get faked out. Like, it would sweep liquidity, it would trade a little bit, and I'd get in a trade, and then it would come sweep the second one and then reverse for me. So I just mark a few, and if they're close together for like a take profit, I'll have my take profit at the second one. If they're close, if they're far, then I'm usually out the trade at this one. For those, just FYI. And then there's days like, hey, it'll just run down. And honestly, I'm starting to really like that 15 EMA to the point where I could only trade the 15 EMA, honestly. Because even if it's choppy, like, this is a nice little move, boom, and then this is a nice little move, boom. You'd sell probably somewhere here, but like, you can, obviously this is insane, you would not trade that, but you could trade like little scalpianas if you want them. Oh, see, Okay, this is like now beautiful. Actually, we need to start marking internal liquidity at 9:30. I keep forgetting to do that. Like we need to start marking the sell side and the buy side at 9:30, and then boom, because then this could have been a turtle soup entry when you get really good at trading. Look how tight your stop loss is. It's fucking non-existent. You probably don't even need to trade with a stop loss. And then you just took that for a 1 to fucking 20. 1 to 20 trade because of that liquidity sweep. Obviously, this is some millionaire trader entry. Most of us will get in somewhere down here, but still, this candle is showing you all you need. And if not, the candle close, obviously. 1 to 1.7, and it's kind of wicking back up though. So with that entry, I don't know if it's worth the risk. But let's see if with that entry, I don't know if it's worth the risk, honestly, unless you do like a tighter stop loss for a 1 to 2. Just sell it, which is fine. Like you can get in a trade, your stop loss is here, and then you wind up moving it here, and then you just take profit. So you're technically not risking as much as you would have. But let's see if it keeps going lower and just bounces off this EMA. Say it did not, so that trade. But if you got that super sniper turtle soup entry, it was great. But I mean, I'll leave it. That's a decent trade. And then came up, small trade. But see how some trades are small at 9:30, and then obviously some trades are big. But I feel like the 1031s are usually mostly big, even if you get in late. Okay, we have a fair value gap, swept liquidity, strong little hammer, inversion of this bullish fair value gap. I'll even place an order for y'all to see what it looks like. I mean, I can't because we already came down to here, but the prices, I can do it from here because, with this software, you need to catch it before. In real life, since it's slow, obviously mine's sped up, we would get in at the bottom of the candle that closed right there and then take it down. And even since we already swept this liquidity, your next liquidity is down here, the one we just made. That's the trade. Or if you want to be greedy, you can take it to this one. If you want to do a quick scalp, you can take it to this one. Like I said, liquidity, swing lows are your targets. But since currently we're here, where I paused it, you do that. We'll even do the stop loss at the top, which is massive. And then we'll see if it goes. I don't want to be greedy. There is a fair value gap right here, so we'll do that. Then you hit place order. Position size, at 4. Isn't it supposed to just take my order where I put it? Let's see. Let's do 1. Contract 1 in queue. Okay, it did not do my stop loss and take profit at all. Can I edit this? I haven't done this in so long. Position. They used to let you. See why I don't do positions like that? It should let me close it though. Boom. Close position. Boom. But now it says negative $267. See what I'm saying? I don't know. This is why I don't do it. Because, did I hit buy? I hit buy, not sell, like an idiot. That is why I'm negative $600. But you should be able to close the position. Keep closing. Maybe it's just closing all of them. I have 4. Yeah, I don't really know how to do the position size. That's why I don't really use them. It used to just do it like whenever you have this, it does it at your stop loss and your take profit when I was doing it before. I didn't hit a buy. Also, that's a prime example of silly mistakes you can make. I've done this on the charts. Obviously, you immediately close your trade, but you can accidentally hit buy when you meant to sell. You can accidentally, let's see, let me show you. Let's log into paper trading. Which, again, for people who ask me, how much money do you need to trade? You need to just log in TradingView and do paper trading. It's free. And all you do is trade with fake money. You'll come in here and you'll say like, usually it automatically sets to buy and automatically sets to limit, which is also a problem. I've honestly set accidentally limit orders and not market orders, which market fills you exactly what the price is. If you set a limit order, the price is moving constantly, so it'll be moving down and your limit order is still way up here even though we moved down. So that's why you don't do that. So you need to make sure you're pressing buy or sell, you're pressing market or limit, you're turning your stop loss on. Like, you have to make sure you do that. And again, it's not the biggest deal because you'll see it and you'll automatically close it immediately. But like I just did, I bought a buy when clearly we were doing a sell, but the trade played out beautifully like I called it playing out. We got a 10 a.m. reversal. And the trade is, again, bigger than the 9:30 trade. That's why I trade at 10 a.m. Now, the day before when we ran down, obviously the 9:30 traders made so much money. But I'm actually upset that this is doing this because closed positions. There's none closed. Whatever. Next day. That's why I don't use that on here. There are tutorials on how to use this app, but I just don't need it because I don't care. I'm just more focused on this than showing how much money we made and lose. But yeah, now we're losing all the money and the account's probably gonna be blown because I don't know how to close this position. Protect position, close position. Oh, that's why. Can you close the whole thing? 100%. There we go. Percentages. I'm going to try to do one more, though. I am going to. Let's see. Let's try to do one more because I feel like since I restarted a new session, we're in 2022. We're not in the other session I was. My settings are a little off. So let's see. Where are we now? We're down here. Tight stop loss. Place order. Stop loss, take profit, already checked like it should have been before. Save, boom. That's what you want it to look like. That's what you want it to look like. And then you hit play, and then look, you're stopped out, and it goes away, and you lost money. This is what you want. Okay, I don't know why it didn't work this last time, but that's what you want to do. So we'll try to do them now. If I can pause it fast enough, let's make the time less, and let's go to the next New York session. So if you care how much money you'd make, which obviously a lot of us do in a sense, but I just feel like for me it's different because, you know, my funded account is different than my live account, I have different funded accounts. It's just, I don't even trade the NQ, I trade the micro, so it's already not even going to be accurate to what I trade. So stop loss here, not stop loss, take liquidity here and here. No fair value gaps. We'll mark another liquidity point here, and we'll mark this buy side one. We'll mark just one of these, and then 9:30 is not really trading in a range. We did kind of sweep these already, so maybe this is a sign that we're going higher. And we swept this one, but let's let it play out and see. And then we mark our 9:30 and we mark our 10 a.m. This software is $35 a month for those who want to use it. Amazing. See, we already swept liquidity with the 9:30 candle. So this candle close was the one for you to enter into. If you want to wait for space at the EMA, you could wait for this one. I probably wait for the second one after we cross the EMA. Stop loss below the body. Do we have more TPs? We have Asian. So the sessions before the New York session, we have Asian, which is the night before, and then London is the morning. These are the sessions that trump, in my opinion. You hope that you have a liquidity point of one or the other. We had some on both sides, actually, which is really nice. But obviously, some people trade only daily highs and lows, which this day we're not running up to daily highs and lows. I mean, it could, but so your target is here. You didn't have an entry enough to take it to here, and that's what you want to do as well. So there are times where, like, say this was our target. We're already so close to it that now you have to just do the next target. And usually the market will go, if your entry isn't confirmed, It'll usually give you, you know, a good run. Boom. Now let's see what we get at 10 a.m. Nice 9:30 trade. Okay, well, we already reversed. So let's see if we get either another reversal or a continuation more to the downside. What's the name of the platform? FX Replay. Yes. FX Replay is the platform I'm using. They have a 5-day free trial as well. Let's run through the days, please. We spend so much time on one trade. I mean, whatever works, but guys, just know it's simpler than this. What's your simple strategy? Sorry, I'm really bad at reading the chat in real time. You're doing too much. I use 4 to 8 a.m. liquidity for SMT or target on higher time frame. I like that. 4 to 8 a.m. liquidity or for SMT. I like that. 4 to 8 a.m. For y'all who said it's simpler, what do y'all trade? Because it could be. Everyone, I think ICT is pretty simple, but again, it's up to you. Let's run through the days. So much time on one trade. I guess. Thanks, of course. Alrighty, this is kind of giving clear signs of we're still pushing. We do have a liquidity point right here, so let's see how we react off this line first. You don't just get in at liquidity points. You want to wait for it to push through it because it could easily just reverse from here. Like that. So you wouldn't have gotten a sell. Obviously, the EMA was telling you as a sell, but that's why we use ICT. Like, hey, we know this is a liquidity point. We're waiting for a reversal back up after we ran down. We got a beautiful market structure shift here. And you can wait for the tap back into these provided gaps. I would probably get in, like I said, I get in candle after the market structure shift. I don't wait for it to pull back anymore. Yes, you get a better entry if you do. For me, sometimes it just runs up without you, and I'd rather have that. There's a bunch of liquidity. There's one here for a target. There's one here, and there's one here. That's a 1 to, almost a 1 to 2, so I guess we can take it up to here for almost 1 to 3. Let's see if we go back up, or we continue down the rest of the day. Beautiful, 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 beautiful. That's it. So yeah, again, 10 a.m. trade, bigger than the 9:30 trade. So yeah, I probably will stay at my 10 o'clock hour. Because again, this is a 4-hour, this is the beginning of a 4-hour candle too, if you're a 4-hour candle trader. But it's how I trade. I know someone said this looks like too much, it's not simple. To me, it's simple. Liquidity is swing high, swing lows. You mark a buy side and a sell side because the market trades zigzag up, zigzag down. So you want to take out one, go above it a little bit, take out below, go below it a little bit, and continue, take out the next one, go higher a little bit, and then, you know, vice versa on the smaller time frame. Obviously, in the bigger time frame, it looks like swing highs and lows downward, swing highs and lows upward. But yeah, this is how I trade every morning. I just mark out buy side. I mark out options at the top, options at the bottom. Let the market show me where it wants to go. Again, if it's at liquidity, you want to wait for it to come down a little bit. I know it sucks for entry wise, but again, these are points it could reverse from. And that was the Asian low, so it did reverse from there. So this one actually took out Asian high and then reversed and took out Asian low, and now we're reversing back up to just do whatever it wants to do. Maybe go up the rest of the day, I don't know. And this is why when people say trade daily bias, I personally don't. I trade futures, not Forex. I used to trade options. I don't trade options anymore. Because you can say, like, this is now a green candle for the day. But we went up for your buy trade, and you would have got stopped out if you were holding this. Then we had a nice down trade. You could have took this down trade and been done for the day, and then we took this trade. So I don't really go in with a daily bias because, yes, we're green today. This is a green candle. Us 10 a.m. traders took the green trade. However, you could took this trade and still made a bunch of money. And sometimes lately on this backtesting session, this trade has been the biggest trade. It's been bigger than this one and this one. I mean, if you held this one, obviously the 10 a.m. one now is much bigger, but you don't have to. As long as you catch the move and you know price action, you don't have to have a bias. And ICT even says that. He said just wait for liquidity to be ran through and rejected off of to the other side and then just take it. And I like that. But again, if you have bias, it does help on certain days where it's obvious or you get faked out and you knew, you know, it was going down all day or whatever. But you see how we just zigzagged, and that still wound up being a green candle. We took out the biggest red move. So That's up to you though. You trade. Everyone trades how you trade, and you keep it comfortable. Like I said, and that's why I love this 15 EMA. Because again, if you just want to trade that, nice. You just want to trade it again to the upside, nice. I use it for things like this, where like this, there's no entry here for ICT. Technically, yes, we got a market structure shift at these lows, but when they're tiny lows like this, I don't really trust them. So maybe under this low here, I would have been more confident in the market structure shift. However, now that we already have a full candle open below the EMA, I would have got in here and we have space. And it lines up with the market structure shift perfectly. You see how like the 15 lines up with ICT? That's why some people, like a lot of ICT traders, are like, retail sucks, you know, trend line suck, EMA suck, whatever. To me, I'm a person likes to use anything. I'll use them all together if I could, if it was useful. Obviously, don't trade 20 strategies at once, but I just wanted something that lined up with ICT and double confirmed. So with the days you're scared, you see that EMA, you're like, I'm not scared, I'm getting that trade. Boom. Probably sold a liquidity point. If not, you might have lost some profit coming back to here, but you still got the run from here to here if you wound up waiting for it to pull back. For me, one big green candle, or even like here, I probably would have sold instead of waiting for that. But again, to each their own. Same way you trade anything, market structure. Exactly. Someone said how is in a literal way. Okay, we can talk market structure. Market structure and price action are the same thing. So market structure is just the market moves in swing highs and swing lows. So it's going to zigzag up, zigzag down. Most of us market structure traders know that, you know, we're making higher highs, higher lows, higher highs, higher lows. Once we start making lower lows, now we're shifting market structure. And then, you know, like when you have a big rundown, you have a pullback. So you should know, like, if we have a big run, we want to pull back. You'll know after really, 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 really big runs, you accumulate a little bit. You got to watch YouTube videos on it. So then you kind of know, like, there'll be days when you're like, oh, we just ran down so much, I don't want to take a trade today. We might accumulate, you know, like that's just the market structure thing that you're going to use. That's how I think you should learn market structure first too, because then you'll know what strategy works for you. Like once you learn how the markets move, then you'll say, oh, ICT works well with how market structure for me. Or you'll be like, oh, support and resistance works better for me. Oh, supply and demand works better for me, because you know how to read market structure. And simple price action. Like a reversal with two big candles is the same as a reversal with the hammer candle. That is market structure. That's just something you're gonna have to learn. What software do you use to back test? I use FX Replay. Also, for my options traders, you cannot use FX Replay for stocks. So you either have to pay for TradingView, or I'll do some research today and see if there's a stock back testing software. This is for FX and futures. So if you're a Forex trader, then you can use this. If not, then I'm sorry. Gotta find a broker. So basically selling your guess. I would like to learn. Well, they're having a side conversation, so I don't know if I can do anything to help them. But let's go to one more day and then we'll be done for today. This is actually a really good session. We had some great trades, great analysis, price action, very beautiful for any traders. Multiple ways to take a bunch of trades. We do have a fair value gap here that we're already in and pushed out of. And I changed the colors to my fair value gaps. For those who don't know, I don't like using just one gray one or one clear one like a lot of people do. If it's bearish, it's red. If it's bullish, it's green. So you know, if we just respect a bearish one to the upside, we're reversing. If we respect a bullish one to the downside, we're reversing. And then obviously you want it to bounce in and go the same way. So it just helps you not think of stuff. Yes, FX Replay for futures. Just keep on YouTube about learning market structure. Exactly, market structure and price action for Jalea. Market structure and price action videos will help you, and candlestick ones. Hold up, only 40 minutes of backtesting. Oh, I can keep going. I just feel like on the weekends, people want to go on about their day. I am kind of hungry because I didn't eat, but I can go on. I like to go on for at least an hour, but I just didn't know how y'all were feeling. I can keep going though. Obviously, I would take my time to educate myself. Yes, educate yourself. Hey, Lakira. Always love your support. And then you go to, for what's her name? Julia, go practice trade first too. So you can learn how to trade and take trades without using your real money, but you're still getting real live action. Now, this is when people have time. True. I'll Uber Eats you food. You're funny, thank you. I don't trade gold. I heard gold has been going crazy lately though, these last few days and weeks. I don't trade gold. I only trade NASDAQ, and that's something you guys should do as beginners. Only trade ES or NASDAQ, or only trade correlated pairs, and just learn them. And then obviously once you get the bearings, because you'll learn the way they move, even though with ICT apparently they all move the same, but I feel like some of them move a little different. Gold might move at different time frames. A lot of people who trade gold in my lives be trading Asian session, which I don't trade. Okay, so this is what we got at 9:30. We tapped into this fair value gap on the 15-minute in reverse. So you'd entered off the candle close of this candle. I don't like a big stop loss, but whatever. Let's see other liquidity points to target to the downside. Sometimes you have to do this, and if you don't see any like this, you have to go to a higher time frame, the 1 hour or the 4 hour. Jeez Louise. Okay, we're already almost at this. There's liquidity here, there's liquidity here, and then we're about to be in a big 1 hour fair value gap. Like this, obviously this is a bunch of fair value gaps, but this is one giant imbalance. I'm sure on the daily or the 4 hour, this is one giant gap, so probably reversing from this point. Again, that's just price action and market structure. That's something you're gonna have to just learn. Again, and you could be wrong, so I could be wrong, but let's see if it reverses from this point. But if not, you're already in the trade anyway. You could take it just to here for a 1 to 2, which is a good risk reward, and this is a 1 to almost 3. And if you want to tie your stop loss, you can do that. You can do it at the EMA too. EMA is usually a resistance point. Boom, boom. See what I'm saying? Like ICT, that's why I like ICT. Some people say it's confusing. He has a lot of concepts, so I get it. If you try to learn all his concepts, it's confusing. But for me, liquidity and fair value gaps, it just makes sense to me. Where's the market going? To one of these blue lines I marked. And where is it going to bounce off of? One of these gaps I drew. And it just does it every day to me. Those are the only two concepts I think you need to be profitable. Imbalances and market structure. Okay, are we going to get reversal? We did come down a few candles. Okay, boom. I want a pullback and then to go back down for me to get into like a continuation at 10 o'clock. So stop loss above the high here. Maybe we'll go fill that gap a little bit. So this is a risk at your own, because we're in a giant fair value gap, and that's why I mark, like when I trade in real time, this will all be green because we're just in a big daily or 4 hour fair value gap. I know some people on my charts think things look insane, which they do, but it just has a purpose. Okay, we did not go down. Oh, there we go. Yeah, so I want to continue down to fill that gap. And if you want to know what I'm talking about, let's see what the daily looks like. See, a big ass daily fair value gap. So this is a big ass thing to trade. So it's one of those things where you would just know that the market could at least go to halfway in this big ass gap. And there's another one down here that's even fatter. So you could take your profit at the top of this one or the middle of this second one. And let's see if it keeps going down to the next one. No, it doesn't. It just stays in this one, but it fills it. So in the higher time frames, it usually fills gaps almost completely, and then it will bounce, and then the next day we might come down to this 2 days from now, a week from now, whatever. But that's why we came down to this gap. And in the 1 minute, look how much space it is. It's a lot of space. So it's a bunch of space. That's why it looks small on the daily, but on the 1 minute, your whole trade is in here. Your stop loss is even in here. And then, once we invert it and come out of it, bounce out of it, you're back in buys. But two good trades. I think the 10 a.m. trade was about the same, unless you took it, further. Then it is bigger than the 9:30 trade yet again, even though it's still a continuation. However, if you are a 9:30 trader and you just were hoping or knew it was coming down to this gap, you obviously won the trade. Like the days where the 9:30 entry is On continuation days, obviously 9:30 people are just holding and making a bunch of money. And on reversal days, us 10 a.m. traders are making more money. But, to each their own. Blowing your account, that's so fun. It happens to the best of us. It happens to the best of us. I feel like if you're an options trader, you don't really need to blow your account. ES, you miss and your account is blown. I disagree. I feel like in Q, your account will be blown way more than ES. ES barely moves, and the ticks are different, so you'll risking way less, make way less. I trade on Ninja Trader. And I trade my live account and prop firms on there as one. That's why I like Ninja Trader. You can trade your live account, every prop firm you want. You get a trade copier, and you can trade any prop firm you want. It's beautiful. I can go to 15-second chart. I don't do that, but I could without paying for it. Unlike TradingView, I have to pay for the 15-second chart. All right, let's go to the next day. I don't know, y'all. Should I get back on at 9:30? I just feel like 9:30 has still been giving us some trades, though. They might not be as big as the 10 a.m. trades, but they're still giving us trades. And even for some people, that could be you risk a little more. You get off the chart, you're done. You're done earlier than most people. I don't know. I feel like I do want to get on at 9:30, even though on Friday the trade was 10 a.m. But we still got a good. The move wasn't that great, but we got a good move at 9:30 on Friday. But it wasn't. It could have been better. It wasn't as good as any of these 9:30 trades we took on this back testing session. You're reading the chart bottom up? What do you mean? Where can you find a 4-hour time frame on Ninja Trader? I don't know. I don't use the 4-hour time frame. On Ninja Trader, I only use to execute. So I'm doing this. I'm on, TradingView, and then I just enter my trade on Ninja Trader and, manage it. But I don't know. I'll do that. I'm not doing that right now though, because I'm on a Mac, so I have to it takes 5 minutes to log in to my Ninja Trader on this parallel. Not 5 minutes, but it's a grandpa app kind of, like most Windows apps. Very efficient though, but it just has to get warmed up. Okay, clearly in a bullish to the upside bounce fair value gap on the 15-minute. There is another one down here, and it looks like we want to inverse the first one already. We're already at the bottom of it with a strong candle. So let's just see what we get on this trade. And then liquidity is far from that on the 15-minute. I don't know how to find for our chart on Ninja Trader. Also, there is the indicators, like ICT indicators on Ninja Trader, but they're third-party indicators, so you have to upload. And I wanted to try doing that, but it's a whole thing. So I'm like, I'll just stick to my TradingView. All right, let's see what we get. I do like the 9:30 pushes though. Like it really pushes in a direction, and then you really just gotta make sure you get in on that push. Okay, this is messy, so I would not have gotten in on that unless you want to just take this candle to this green. But this is a 1 minute, so it's quick, and you need to be able to get in and get out. Like but this is messy. I wouldn't get in that yet, but this is, if you do, we know it's at least going to this gap. Now, if it continues down after that, we need a better confirmation. But if that's a trade you like to take, you could do that. Boom. We respected the fair value gap. We did. And now we're pushing up out of it. No, we're not. We're just pulled back to go lower. See how you could have got stopped out if you would have got in and held this trade to go lower? Wait for a better confirmation or take profit at that first one. But like having your stop loss above this high, which most ICT traders do, or even this high, you still would have been stopped out by this pullback. So you would have wait for a better confirmation. So I guess you can take this trade down to this low. After this, I'm not too confident, but this is what backtesting is for. Seeing what it does. No. Because see, these are, it respected these value gaps. I mean, it could still go down. It did not. All right, 10 a.m. reversal is what we're in. And this is why I did start waiting until 10 a.m. because obviously this is our first fake out we've had this whole trading session. But there was a time where I was trading at 9:30 and I was just catching all of these. And it was pissing me off. I was just losing 2 trades in the first fucking 5 minutes of the market open. Like, and my rule is 2 trades a day. Well, 1 trade if I win, and then if I lose the first one, I'll take 1 more. All right, market structure shift, fair value gap, tapped into it right here. If that's the entry you wanted, obviously I get in after the market structure shift, so my entry's a little late. I could do a stop loss below this low, but I might. And then what are our buy side liquidities? I didn't even mark them. Terrible. So you always mark buy side and sell side because you don't know. I personally let it play out. I don't go in like, oh, we're going to be green, we're going to do this. I mark both because if it wanted to go down here, it could have, and then obviously we reversed. So we'll take it to this one for a 1 to 2. Let's see if it goes or we get stopped out, which can happen. And we did. So it's just a losing day all around for this day. Losing day all around. Or some people might take profit here. They might move stop loss to break even at that point. Anything usually above 50% or 60%, I try to move my stop loss to break even now. So it's just free money basically. So you're like, okay, you didn't lose this day. You just didn't make any money. Some people do that. Some people just take profit once it starts going lower. I've done that before too. If we run up and we start to go down, I'm like, all right, I'll take my profit. And then if it continues to run up and I missed it, oh well, I made profit that day. If your strat doesn't happen at open, you wait for 10 a.m. I feel that. I feel like I do kind of want to start getting on at 9:30, and if we don't see an option, wait at 10. But I just feel like, for me, I switched to 10 o'clock because you get less fake outs. Obviously, we got one here, but I would have moved my stop loss to break even on this trade or took profit. This is the first fake out we had on this session, but I did another 9:30 session like a week ago, and we had a lot of fake outs. I think we had like 4 fake outs and 6 good valid like trades. But it just is what it is. You're there's no strategy that's 100%. You're gonna lose, so you have to just be able to be mentally prepared to lose and not let it fuck you up. And that's the hardest part of trading, because you'll lose. Like I said, we only lost what? This is the only trade we lost on this trading session. So you only lost once, but like, don't let this be like, fuck, I lost, or you over leveraged and blew your whole account on one trade. So that's how trading works. I feel like we had a great session. I feel like we can call it. If y'all want me to continue, I can continue. But I do think we can call it, because I do these literally every day. And I'm doing these every day the rest of the year, so we have time to keep doing this, and we do this every day. So yeah, this was a day. And again, this is actually something I want to talk about too. Days where we have 2 higher time frame for value gaps like this are days usually when it gets scary, because these are places it bounces off of, and it did. It just bounced in between like a fucking ping pong ball, and it never went in that direction. If you got a better entry and you got on before 9:30 or before 10 a.m., which, you know, I'm thinking about doing, getting on at 9, so maybe I can catch this. This is a nice little trade. You got in on this gap, stop loss below this low. You almost got stopped out here, and then just took it to maybe like this liquidity point here. Not the best risk to reward. Maybe the second look. Oh no, that's the next one. The next one's way up here. So yeah, you take it to this there for a 1 to 1.7. Not the worst trade, but you know, the 10 a.m. trade failed. It definitely failed. And then some days you might go and get back in. Does it go down to here now? Yeah, no. It played all in our face. It went the way we wanted it to and played in our face. I mean, actually, technically, okay, so I got in at the second market trigger shift, which is way up here, so that's just annoying. But it never stopped us out. It never broke below these lows. So technically this is a nasty risk to reward though, for a stop loss that big. So we either would have got stopped out. This is nasty. Let's see this continue higher at least to give you a 1 to 3 or something. Yeah, it did. So I've said that if it gives you a big stop loss, it will at least run to give you at least a 1 to 2 or 1 to 2.5. So actually, this didn't fail. This is just me being scary with a tighter stop loss, which is one of my problems. I have to not be scared of big stop losses, because if I know where the trade is going, I don't need to be scared to have a stop loss. Because technically, as reversal traders, I have to tell myself this every day in the mirror. Your stop loss is the swing low made for the reversal. That's why I don't like continuation plays. Because if you got in somewhere up here for it to go higher, like in the middle of the trade, you would have been stopped out at that move. But as reversal traders, your stop loss is always the swing low before a reversal up, and then the swing high before a reversal down. Always. As ICT traders, your stop loss is always the low or always the high before the reversal. So you try to catch the top. Obviously on continuations, like, see, this is the overall reversal. If you get in down here, your stop loss has to be, wherever you want it. But for me, sometimes you can have your stop loss here, and the market can still go up here, stop you out, and then go your way. So that's why I preferably don't like continuation plays. I like to catch the bottom of the reversal, in my opinion. But again, there are some continuation plays like this that, your stop loss could just be these highs and it didn't come back to you. If you got in down here and your stop loss was this high, though, it stopped you out to keep going your way. So it's, it's something. And or don't take this trade if you don't like the stop loss. It just is what it is. Especially though, if you got down here on that mark trigger shift down here and your stop loss was down here, you're really good. You were chilling. Us 10 a.m. people, we got in a little later. So still decent risk to reward, but that's just, it is what it is. Look at 10:30 p.m. candles really quick. Sets the trend normally for liquidity grabs. I want to learn. Well, yeah, stay in the lives. We learn. You said 10 p.m.? 10 p.m. That's definitely a.m. Let's do the day before. 10 p.m. is 22 on military time here. I mean, not this day. I don't really go by 10 p.m., but I do go by the liquidity from the sessions, like London and Asian. I go by that because this is 10 p.m., which is the Asian. Obviously, London took all that liquidity. This is for the traders who trade 2 a.m. If I move back to LA, I probably will start trading London session because that's just midnight for me. I'll trade London and New York, but being on the East Coast, I'm not. 2 to 3 a.m. is just not me. I can stay up to midnight to 2, but waking up at 2 to 5, no, absolutely not. But people do. It's Johnny plays trades. I do like London price action because London usually starts your power of 3. Where's midnight? So you really can get it on. Obviously, this is a day where, it came down and stopped your ass out. But you really can just wait for the price to go below the midnight open, buy, and it'll run up a good bit for you. Obviously, have a stop loss and go back to bed because for days like this, New York really sets the real power of 3 of the day. So, it stopped you out and came up. But London, you can easily just trade off midnight open. Like every day. Like it opens here, wherever the midnight candle opens. It's a little choppy in here. Once it gets below it, a good bit, it reverses, buy, and then same thing. If it went up a little bit, sells. And it kind of plays out really nicely. But yeah, 22:30, 2 a.m. reversal. Yep, 2 a.m. reversals, which is a London kill zone. So also a good time to trade, like I said. New York, obviously, kill zone. And especially, it depends on what you trade. So if you trade Forex, you trade GBP, USD, or Euro USD, London obviously is going to be your session, and New York because USD. But since I trade the NASDAQ and the S&P 500, like New York, that's a New York trade. That's an American, investment fund. That's American stock. Like that is an American ass thing. So I'm going to trade it in the New York session. But when I traded USD JPY, I traded a lot of Asian session and American a New York session, but a lot of Asian session. So it just depends on what you trade. You know what I'm saying? But yeah, a good hour on the charts. Great. backtesting session, great price action. We only had no losses actually. Well, technically yes, this would have been lost. Let's not get overconfident. In real life, we would have been scary, or I would have been scary. Tight ass stop loss, stop me out to go my way. However, if this was my first trade of the day, which it would have been at 10 a.m., I definitely would have got back in. Like as soon as we got another market trigger shift to the upside after stopping my ass out, and I would have made my losses back. And then some. My problem is when I take a loss first, I like to do a trailing stop and it be fucking me up. Because sometimes it'll come up, it'll come down, hit my trailing stop, and then continue. This day it wouldn't have done it, but it just this would have been a loss and then back for a win. Some people take 3 trades a day. It just depends on the person. But I like to take 2 max. If I win the first one, that's it. 1 trade if I win. A lot of moves are missed while people are sleeping. I agree. But also, my thing is, 1, you have to be healthy. Me waking up in the middle of the night is going to ruin my whole fucking day. 2, we all got into trading to be financially free. So, it goes with best with your schedule. That's why I like 10 a.m. because I usually trade. I mean, the trade is longer than the 9:30 trade. I'm not going to lie. The 9:30 trade is like 10 minutes. So you really can have a 10-minute workday. But I like the 10 a.m. trades because they're bigger, but you do have to work sometimes 10 to 12, 10 to 1. You're on the charts a little longer, but 2 hours a day, I'm off the charts. I used to be a hustler. I worked in film. I used to do 12-hour days. I used to work with every celebrity. I've literally slept in my car from Kanye's house to go to Lady Gaga's house. Like, I used to be that girl who like just makes money, trade, and then people who trade all day, trade at night, trade in the morning. Like, but I think you should focus on a time frame that works with your schedule, and then you enjoy the rest of your day, in my opinion. Like, don't get into trading to continue the capitalistic hardships. Yes, you'll be a millionaire, but if you're working 12 hours a day with no sleep, what's the point? What is the point? But yes, if you like trading overnight, do it. But I don't suggest trading overnight and the daytime and Asian. Like, I don't suggest over trading all the things, in my opinion. Pick one, stick with it, and enjoy your day and touch grass. Especially because the more you trade, in my opinion, and well, most of us, but I know me, the more I trade, the less I either get more confident, so my trading flops, or I get too scary and my trading flops. And those are 2 bad things you don't want to happen. You don't want to be scary and just be out here, not trading poorly, or you don't want to also overtrade and just start taking bullshit shit because you're confident. Oh, my mom's calling me, so I'm going to get off this live. And I'm going to call my mother back. See y'all tomorrow. Tomorrow, same time. Hello. You better remote shoot.